Market Update on Kaya Biz.
On today's market performance, as mentioned, last week was really a week filled with so much optimism. I was really excited that we'll breach that 60 or 59,000 point level, which would then lead us to 60,000 points. But seems as though patience is what's required, as always, of an investor, as we too see now 2 negative trading days on South Africa's all-share index. Today, the close in negative territory by over 0.75%, so 0.75% in negative territory, having closed at 58,310 points. Interesting to note where the weakness is coming from, and again, it's from many of the industrial counters, weaker by more than 1% there. So really referring to the likes of Mr. Price, Naspers weaker by 2.3%. And as we know, when Naspers sneezes, the rest of the market catches a cold. So unfortunately, not looking too positive for companies like Sasol, weaker by 4% today. Truworths and Mr. Price, interesting to see that retail sector dynamic there, both weaker between 2 and 3%. But you know what that means? When there's anxiety on the markets, that's where we see a lot more optimism in the mining stocks and resource companies, because they're backed by actual commodities. And platinum counters like Northern Platinum, Impala Platinum, Anglo Platinum, all up by at least 5% today, including some of the usual gold counters like Harmony Gold. So an interesting day so far on the local markets, and hopefully we can see some kind of optimism. But if we take a look at what we've really been hearing regarding South Africa's investment narrative, lower volumes, lower trades, foreigners not investing in our local bourse, and that coupled with the macroeconomic backdrop, it's not looking too positive. Now, today we decided to get an outsider's view of South Africa, a first-time visitor to the country, and hopefully we leave him with a positive note to keep on coming back in future. In studio, I am joined by a research analyst at FXTM, an entity based in the UK, to give us some insight into the international investors' view of South Africa, Lukman Otunuga. Welcome to the show.
Thank you very much for having me here today. It's a pleasure.
I'm glad to have you here, and a warm welcome to South Africa. I think for a lot of the listeners, they must be actually inquiring as to how this relationship gets established. But as a research analyst, you often publish a lot of your thoughts and your views about the macroeconomics that you observe around the world, especially when it comes to emerging markets like South Africa. So nice to finally put a face to the name, right, to the newsletters that we often receive. But I touched on the fact that it's your first time in South Africa. And your takeaways so far?
So far, it's been absolutely amazing. I'm staying around Rosebank. The architecture is nice. The food is top quality. I love the steaks.
Oh, great.
People are very friendly. I'm coming back to South Africa again.
I'm glad to hear so, Lukman. And even if it's not really based on the macroeconomics, but really based on the people factor. But going back to the numbers, and if we take a look at where South Africa is, we're in the middle of 2019. The elections have come and gone. Ratings agencies still giving us a bit of a breather. But the truth of the matter is that looking at the numbers, they don't really add up.
Yes, we've already had a taste of what to expect from the South African economy in 2019. Given the GDP figures we saw, it was quite shocking.
Bleak.
But at the same time, it's not really fair to isolate South Africa, because it's other African nations. I'm from Nigeria. Nigeria is still going through a fragile recovery. Yeah. If you look at developed nations, Europe, United States, the United Kingdom, where I'm based, it's all the same sentiment out there, and it's all thanks to ongoing global trade developments.
I'm glad that you mentioned that South Africans shouldn't be too pessimistic, which is what we're well known for about this bleak and dreary environment and the poor leadership of our state-owned entities. But if we do take a look at the macroeconomics of this country versus other emerging markets, how do we fare? Are we punching above our weight versus a Venezuela or Turkey?
Well, we can see it in Iran's valuation.
Yes.
It's clearly reflected in Iran's valuation. Year to date, the South African rand has actually traded flat against the dollar. So the local currency has actually been given a fresh slate right now. You know, the economic conditions are mixed. So what I'll be looking forward to is what happens in the second half of 2019. Now, naturally, investors will be looking at domestic conditions. Like, yes, we know that manufacturing, mining, agriculture took a hit in Q1. But I personally feel that South Africa's outlook is actually mostly dependent on external drivers.
Really? So we still need to be concerned about Trump as well as the ongoing trade wars with China?
Absolutely. The reason I'm saying this is because when we dig deeper into the numbers, we can actually see that 30% of South Africa's GDP is actually from exports. So South Africa is an open economy, and when two elephants are fighting, forgetting the grass is going to get hurt, and the grass is South Africa right now. So this is why the G20 meeting this week is very, very significant to South Africa's economy, especially the trade data we have. If we do have signs that South Africa is still in a deficit, this suggests that appetite for South African goods remain muted thanks to trade developments, and ultimately this will be reflected in the rand.
Afropolitans, if you've just joined us, we are in conversation with Lukman Otunuga. He's a research analyst at FXTM, a company that provides commentary as well as details for investment participants from the UK. I'm glad that you mentioned the international dynamics, but if we dig deeper here in South Africa, we've got the ongoing state capture inquiry. We've got state-owned entities which have bleak balance sheets, lack of leadership, and this all speaks to the weighted and heightened pressure on our national coffers. How is the international community interpreting this budget deficit, as you say, that could increase more substantially?
Naturally, this does present an element of uncertainty, and this uncertainty will be reflected in the South African rand. And I think this is what Moody's also waiting for as well, that we'll be looking for South Africa to find a way to find stability. Should we have a situation where things are able to improve, this could reduce the possibility of South Africa having a credit downgrade to junk.
And how do you think we'll fare, especially with the likes of Fitch, if I'm not mistaken, who's kicked the can down the road?
So if we compare South Africa's economy to a boxer in its final round right now, a downgrade to junk would be the knockout blow, because we could see a situation where billions leave the economy. Now, we know that South Africa is currently facing a storm of domestic and external headwinds, and this is the last thing the nation needs right now.
Exactly. And if that does happen, worst case scenario, looking at the valuation of the currency, as you say, 14.29, really driven by international factors, but will that be that final knock?
I don't want to be the bearer of bad news, but if it compounds to a situation where ongoing US-China trade developments also continue to intensify, the South African rand could depreciate 4 to 5%. But look, it's not fair to continue isolating the rand, because other emerging markets will feel the heat of trade tensions.
Give us something to be hopeful about, Lukman. I'm worried here.
Okay, let me be hopeful. So right now, Moody remains optimistic of South Africa's outlook. They've predicted growth of 1%. South Africa Reserve Bank has also predicted growth of 1%. Reuters are predicting 0.6% and veering towards 0.8%. But
I think you have a more realistic outlook.
For us to see this, I believe that the central bank needs to take action. And this action will come in the form of a rate cut. Now, the reason I'm saying this is because a rate cut is very important for the South African economy. A fair chunk of GDP comes from consumption. So if rates are lower, people will be more happy to spend, and businesses are likely to invest more, and this may translate to employment. But a rate cut in South Africa will be dependent on what the Federal Reserve does. Everything is interlinked.
But let's talk about that, because the Federal Reserve has given us a tone, a very dovish tone, right? That they're not looking to hike interest rates, even though from an economic standpoint, and the economic data in the US is actually pointing to the fact that they should be hiking. In South Africa, though, we've had a very mixed reaction from our Reserve Bank, and of course lots of questions raised about its mandate. How do you see us managing that? And if we do cut, could it go further, and could we be more flexible to actually see 50 basis points rather than the usual 25?
So with what you said, you're right. The Fed has actually had a policy U-turn. They're actually more dovish now. They've actually seen cracks in the economy. We saw a disappointing US jobs report last month. Signs that the United States has actually been negatively impacted by trade tensions. But what's happening right now is markets are getting slightly ahead of themselves. The Fed is speculated to cut interest rates next month. I personally think this is a bit too early, because a rate cut from the Fed will trigger a domino effect with other major central banks and developed central banks across the world cutting interest rates. So
ECB.
Exactly, and it's too early for that. So I feel we may have a situation where the Fed sits on their hands and takes action probably in September, October. But now, moving forward to South Africa, a rate cut is very important because it does support consumption. And, okay, our argument for not cutting rates may be inflation, but when we look at inflation in South Africa, it's all anchored within the central bank's target, 4.5%.
It is, especially if you take a look at the most recent figures that have been released there, and there has been commentary that the SARB is actually more lenient to actually apply that cut. But what does that mean for the average South African who is probably very well indebted, has a little bit of savings, is struggling to get by, and really really concerned about the rate of retrenchments that we see from corporate South Africa. What do we do?
As I said, like, a rate cut will translate to savers. Savers may not get the return they're looking for, but at the same time, this same rate cut will positively impact businesses and spur consumption, which ultimately would be good news for the South African economy. Yeah. And this is what's needed right now, especially when we have the Moody decision a few months' time.
Exactly. Moody's, unfortunately, going to give us their view on South Africa, and they've been very lenient. But Lukman, as we wrap up this conversation, you heard the State of the Nation address last week by the President Cyril Ramaphosa, who allowed us to dream of a better South Africa. But if you had his ear for a moment, what advice would you give him in order to really kickstart and bolster South Africa's economic growth?
Well, listening to the sonar, it was quite interesting because it felt like, I like to give these examples, it felt like the president was a coach and South Africa was a football team in a final tournament, and he was just giving, you can do this, don't give up, don't give up. It was quite a hopeful speech. He said a lot, but looking at the Rand's reaction, the Rand was not listening. And I think we've hit a stage with the South African Rand where the Rand is looking for results. It's looking for hard economic data to move. But really, in terms of what I feel, the first step would be for the central bank to cut rates. And with that, we can see more action.
Governor Lesetja Kganyago, we certainly hope that you're listening and that your team at the MPC will also provide us with a favorable decision for many South African consumers. Lukman, such a pleasure having you, and thank you so much for making time. I think you've refreshed our view of the South African economy, that things are tough, but hopefully we are tougher.
Thank you very much. And just a final note that, as I keep repeating, it's not only South Africa, Nigeria, other nations in Africa, Europe. I'm from the United Kingdom. Yes. We haven't even spoken about Brexit.
Exactly.
Brexit.
So how about you move to South Africa? At least we know who's
I'm considering moving to South Africa. So far, in the few days I've been here, I've been living like a king.
Oh, fantastic. Thank you so much. And as they traditionally say in Nigeria, thank you so much, Oga. I'm not too sure if that would be appropriate right now.
Thank you.
That was Lukman Otunuga, a research analyst at FXTM, well known for providing us technical analysis and delivering in-depth insight through FXTM.